Hey, welcome and good morning. Can I get a quick sound check from anybody that's listening?
Can I get a mic check?
Oh, that full screen's weird.
That was my scene for the day.
That was it.
I'm still wearing a Razorback shirt, even though Georgia just absolutely manhandled us last week.
They're a much better team. Jim, are you on? You're usually my mic check guy.
Seems dark in my office. It's because it is. Got lighting problems. It's all right.
So last week we were talking about oil and gas
And banks.
and banks. How are we looking?
Looks like you should have bought oil and gas and banks.
Nice.
So
Tell us about it.
I'm going to mostly focus on oil, banks, and other commodities because I noticed a lot of the agriculture commodities did pretty well late last week, and they're starting to have some follow through again. So I think it's very important when the market's coming under pressure and it's looking ugly. If there's other stuff out there, even if it's not a sexy tech stock or something like that, we're going to look at coffee here in a minute. We're going to look at cocoa, and these are ETFs that you can buy. That are starting to break out. So we're just looking for trends. We don't care where we get it, right? I'm not biased to the kind of industry that I get a trend from. So we're going to look at some stuff that's moving today, try to get you through this fourth quarter if the market gets a little ugly so you can still make some money. Can I get a screen share? Sorry, let me share. That's something I got to do. Haven't had enough coffee.
Yeah, Monday came quick.
Always does.
You want full screen?
Yeah, give me full screen. So I want to start with the overall NASDAQ right here, and then we're going to look at, the S&P. We're going to look at some commodity indexes. We're going to look at some market breadth, and then we're going to look at some trade setups that I'm seeing. There's still some out there. So the NASDAQ, let's start here. It's looking pretty ugly, right? It's quite a bit off the top. There was a nice bullish reversal on Friday. So, and sometimes with these reversals, like you get these little buy signals, and in my opinion, you got to swing the bat or at least kind of stick your toe in the water when you get these. Because even though the market's down this morning, a lot of times what will happen if you get a buy signal on a major index or if you get a buy signal on some stocks, like you'll get a buy signal and then the market will get wobbly for a couple days. Like it's not a straight up shot, and then sometimes it'll settle down and then pop. So if this is to work, I think, the market really only has probably another 2 to 3% pop upside to them where they hit, that 20 and that 50-day moving average crossover probably before it gets hit back down. Because you've heard me say multiple times, a lot of times when you're in a correction, you'll get multiple rejections at that declining 20-day moving average, just like you did over here, right? The market sold off, hit the 20-day, sold back, right? Hit the 20-day, sold back. Third time's the charm. So right now, we really only got one rejection. Maybe we get two, right? And then we'll kind of see. And then hopefully, usually third time's the charm. And that's the same is true on when something's bouncing off support. A lot of times, third time is not the charm. The first bounce is usually the most successful. You got bounce one, bounce two, third time is the break, right? So you kind of got to flip those. So I've always noticed with support and resistance, there's usually a rule of three. Now it's not 100%, but it's a pretty good indicator or indication that the market is either tired to the upside or tired to the downside and has a potential to make a rally. But right now, we're just going to have to see how this day goes because, tech stocks are not doing very well in the rising interest rate environment of the last couple of weeks. So let's look at the S&P 500, a more diversified basket of stocks. It's, you got the 20 under the 50-day. It's basically the same chart. So you do have a little double support right here, right around the 4,300 area. Don't know if it's going to hold. I'm kind of thinking it won't, but we could get a multi-day bounce. and be careful of these multi-day bounces. I think you really want to maybe stick your toe in the water, maybe buy 1-2 pilot positions. Don't go all in thinking you're going to time the bottom. That's a quick way to blow up a portfolio. So just stick your toe in the water if they're working, or let's say if the market gets back above the 50, maybe gets back above this pivot right here, then it's safer to put more money to work. Or we're not trying to get out at the exact top. We're not trying to get in at the exact bottom. That's really a sucker's game. We're trying to catch the meat of the move, right? So put in a little bit of work when you get some buy signal, and if it's working, you can put more money to work. One thing I want to look at is the market breadth right here. So on the market breadth, you can see, where did that StreamYard go? Okay. So let me try to blow this up a little bit. So let's just look at this top window pane right here. You have the percent of stocks in the S&P 500 that are above the 50-day moving average. So the 50-day moving average is really what I like to use as the trend line. The 20 is the rally line. So stronger rallies are going to be above the 20. More reasonable, rallies or uptrends are going to hover above the 50. Once they start to get below the 50, especially if the market starts to live below the 50, you really need to be cautious on some individual stocks. But you can see right here, only 35% of stocks in the S&P 500, that 500 stocks, are above the 50-day moving average. So a lot of them are not holding up. And I'm confident that of these 35%, you're going to have more financials and banks, or more financials, banks, and commodity oil-related stocks that are really the majority of it. You can see right here, technology. Now, this is the percentage of technology stocks in the XLK above the 20-day moving average. You can see that's pretty weak. Financials are 61%, so much stronger. You have discretionary stocks weak. You have industrial stocks weak. You have healthcare stocks that are weak, at least in this ETF. And then look at energy. So it's clear to me, and then you have materials down here. The materials are a lot of the metals. So you have energy that is 100% of the energy stocks in this ETF are above their 20-day moving average. And then you have financials that are looking pretty good too. So this is just a great way to really figure out, where should I put some money, or what's really holding up? And really nothing is holding up but energy and banks, and that's where you need to be focusing on, and that's where I'm focusing on right now. I don't know how long the rally is going to last, but if they're in an uptrend and they're breaking out, even if the stock market is pulling back, I'd rather just play those. So everything's looking pretty good. 35% of stocks above the 50-day moving average. That's actually not so good right there. Let's look at the NASDAQ real quick. 21% of the stocks in the NASDAQ are above the 50-day. That means almost 80% are below. Tech stocks, growth stocks in particular, are just getting hit harder in this rising interest rate environment. So it's not, it doesn't mean they can't rally. It doesn't mean there aren't some good tech stocks out there. Tesla's popping this morning. Yeah, it reported earnings pretty nicely. Doesn't mean there won't be some stars, but it's just, when I invest in when I'm looking at industries, I would prefer to invest in industries that have broad participation, because half of a stock's move is just going to come from the industry that it's in. So if you just focus on the stocks that are in the strongest industries, you just gave yourself a huge advantage, and then kind of narrow them down from that way. But right now, I think I kind of made my point on that one. So let's go back to just kind of show you a little bit more. I think the ARKK, this is an aggressive growth fund. Kathy Woods run these, and she really is, one of the best growth investors out there. But obviously, when you're dealing with growth, you're a long-term strategy. And it is really, since a lot of these growth stocks peaked in February, has done nothing. A lot of these momentum stocks, and has looked pretty weak. And in 2020, momentum stocks, they just dominated everything. They had their best year. It doesn't matter what system you had. If you were trading a momentum style system where you're buying the strongest stocks, you probably did incredibly well in 2020 until everything peaked in the beginning of 2021, right? So when you see this constant underperformance, you don't know how long this is going to last. You need to pivot. So if you just are in love with tech stocks, just understand that right now you're swimming upstream, and we just want to go with the flow. So let's look at what's strong today. Let's look at some commodities. Let's look at some banks. And I have this commodity list right here, and this is just separated by 19 commodities. And I don't even think UNG is in here, but just look at all the above average volume that is piling into some of these commodities. You have FCG. I've been talking about that for a long time. That is, up 15% since the breakout. You have DBO, you got the oil fund. I mean, that's just hitting fresh highs. Look at that. So you have the market that is hitting fresh lows, and you have oil and energy that is hitting fresh highs. Cocoa, it's funny because on Friday I was looking at cocoa, wheat, and what was the other one? Coffee. So, and we'll look at all those charts. And there were 3 of them. And I'm like, all of these ETFs are actually ETNs because they hold the physical assets, or they hold the physical contracts. They were all up way more than the market. You can see right here, cocoa, right? It was up 3%, and wheat was up over 3%, and coffee was up 5%. So I was like, I want to get in on some of this agriculture because it's looking like they are very early in the breakout. So I bought wheat and coffee because they were the strongest 2 of the day. And then, of course, cocoa is the one that pops this morning. But that's totally fine because that's just part of it. But look at this. Coffee right here is making a major move. Look at this relative strength line. This isn't a very liquid ETN, but it's making a move, and it's likely going to break out. And this ETN coffee really has a history of going nowhere. I would say this rising relative strength line, a lot of the accumulation is coming in. This has all the inner works of something that is really going to move to the upside. Plus, you had a weekly reversal pattern on cocoa right there last week. So you have this chart, and I know this really, the sideways action really, really looks ugly, but I would really, really pay attention to this. It would have been better, obviously, to buy on Friday, but it's breaking out right above this little pivot. You have a cup with handle pattern. You have a breakout. Maybe if you're looking to enter, you can get a little bit closer because it's gone straight up. It's gone 10% in the last 5 trading days, but this is something that you should definitely be aware of. Now, let's go over to the ETF list. So I think cocoa needs to be up there. So nat gas is parabolic. This thing is going absolutely to the moon. I'm probably not going to get involved in nat gas because the last 5 trading days, it's really trying to find direction. It's doing a lot of tugging and pulling. So I'd more prefer to play the FCG and see if this does pull back, retrace a little bit. Right now, this is extended. I've told everybody for the last several weeks, I do own IEO. And since it broke out a couple weeks ago, and all these ETFs, all these energy ETFs were breaking out above this next line, I was placing a buy signal on it. I said, hey, I got in, you should get in, or you should at least consider it. And they are just making some really, really nice moves. This is really, really nice profits for me at the moment. Rising relative strength line. Again, a lot of this stuff is getting extended. So I hope you took action last week or the week before. But you can see there's just more and more energy continues to dominate the top 10, more and more commodities. So I think it's very, very important that you really shift gears instead of looking at the most wonderful earnings reports or whatever. These commodities are moving. And if they have an opportunity to buck the trend, I don't need to go fully invested in commodities, but I'm going to own some because you never know where you're going to get your outperformance for the year. You can underperform all year and then stocks roll over and you're like, geez, how what am I going to do? How's this year going to end for me? And if you kind of have that mindset and you don't really open your eyes to commodities and other assets that are moving, I mean, this could be your opportunity to play a little catch up. So this one, IEO, I said several weeks ago, I bought, is doing very good for me at the moment. So here's something that is really interesting, and that's North Shore Uranium, Global Uranium. And I believe it was on Friday's Top ETFs of the Week video that I sent out on Friday. I said, hey, you might want to look at this uranium because it made a monster move. Like this North Shore doubled. Like it's pretty crazy for an ETF. And then it pulled back to this support zone right here. And what I literally said in the video, I said, if you get a pop right on this, which is happening today, I would get in. So this uranium, sometimes they pop at once and then they try to pull back a little bit, but this is so strong. Sometimes when you have really the strongest areas of the market, you really just got to swing the bat and hope that you don't get shaken out, because a lot of times you'll get secondary opportunities, but they won't always be the best opportunities that you like. You just have to swing the bat. So uranium, I would honestly place a buy signal on this. And because I don't know how you can make the bearish case. It moved, it retraced that support, it's popping Monday morning. This looks good all day. This looks right for a trade, and which is a stop under last week's low. Like you can risk, I don't know, 7-8%, or you can even take a half position risking 7-8%. And if it, comes back below, so be it. But uranium is making some significant moves. Because you can see right here, there's the global, the URA looks exactly the same. Made a monster move, pulled back, popped, is looking like it's ready for a second act. So again, I wouldn't be surprised if it pops and then kind of pulls back a little bit. But if I enter, I'm going to enter a stop under last week's low. So that gives it a little bit of room right there. So uranium right now, I'd say, is at least the best looking opportunity out there. Cocoa is looking really interesting. If you want to, you can let it pull back a few points, but this is looking ripe. I believe all the energy and nat gas ETFs are extended. You're going to have to wait for another pullback. And look down here, and this is just, I'm just ranking this of the day. You have a lot of the copper and metals that are moving today, but they're underperforming their agriculture and their energy counterparts. So investing in just a broad commodity index that is made up of agriculture, softs, all kinds of different things, energy, metals, gold, precious metals, base metals. Why not focus on the strongest ones? So for now, at least as of now, the metals just haven't done enough. I mean, they're still in downtrends. All right, this copper is still in a downtrend, although it is looking ripe for a breakout. So let's go back over to the commodities list I got, because even though I did enter wheat and I entered, what was the other one? Coffee. Let's look at these charts. So coffee was actually the strongest one on Friday, and it went. Look how quickly this move is. I mean, you literally can be in a kind of a parabolic type of commodity market, but you have a double bottom, found support at the 50-day moving average, and then a breakout of the neckline. Looks pretty good to me. So coffee is looking still, I think, in buy range with the stop loss under Friday's low. Wheat, you have still got a lot of volume coming in today, but look, you have a nice little neckline right here. You have a lot of accumulation stepping in. Maybe this one needs to pull back a little bit closer to support, but it broke out. I mean, it did, and it might create a handle. Like you have a cup, it might create a handle. So, if you want to, you can buy half now and then see if it pulls back. But sometimes, again, they don't give you multiple opportunities. That's why on Friday, I was like, man, I really prefer to get it closer to the breakout. But commodities can move very, very quickly, and they can be, I mean, you can see right here, like they can take one pop and then be absolutely gone. So,
hey, one sec, real quick, Steve. For the question about the IBM trade, that was a credit spread trade, right, from Greg last week. So that's actually a different show that Greg recommended that trade, and that show's on Wednesday. But if you need to talk to him or email him quicker, you can email him at options@thetradersplan.com. I'll put that in the comment section. Just didn't want that to get lost. There's been a few questions come in.
Yeah, no, that's fair. That's fair. Yeah, ask Greg. So, man, it's just right now. I'm really looking at commodities and then financials, and we can go over to the financial side of things and look at banks. Right here, you have KRE and I've talked about this for several weeks, right? You have a nice little neckline right here, and it broke out, and now it's kind of drifting higher with that rising relative strength line. So, I mean, this looks pretty good. I'm probably looking for a slight pullback, like see if it kind of settles down, because it did go straight from 60 to 70. That's a pretty quick move. It's likely that banks will calm down just a little bit and pull back. But, right now, these are really the two commodities in agriculture and energy. And the banking is really just the two areas of the market. And uranium, I'll add uranium. Kevin said he bought uranium last week based on when I mentioned it, and yeah, I kind of wish I would have too, because it's really popping this morning. But I went the commodity route, but that doesn't mean I still think it's a buy right here with just a really tight stop. So nice job taking action on that. So if I had to pick one I'm looking at the questions now, between your URA and URNM, this one, I'd probably pick this one because it's stronger. All right, if I go over to the ETFs, it's up more today. It's up 5.9%, or now at 4.8% versus 4.3%. I think this one has just, over the last one month, this one has done 21% versus 12%. When in doubt, like, hey, which one are you going to take? I'm going to take the strongest one. I'm going to take the one that is outperforming the most. That's just a simple rule of thumb. So I'm kind of taking tickers now, because we looked at the commodities. We looked at everything. Although there is one more chart I do want to look at, and that's crypto. The last few weeks, like, I've been a little negative on crypto because it just looked bad. You have a rally right here, and then the trend line broke, and it started to break all moving averages. It really looked like it was going to roll over and come down here. And then you really had on Thursday, when the market was ugly, it was up. This GBTC was up 5%, and on Friday it was up 9%, and it's up more today. So maybe this does turn it around. You almost had a reversal pattern. It was below average volume on last week, but you almost had a reversal pattern on the GBTC. But so far, I was calling for a breakdown, and this, I'm watching it closely. I wouldn't just straight up call this a buy signal, because you'd have to have a pretty wide stop. You'd have to have a very wide stop. But I mean, if it starts to move back above the 200-day moving average and really gets back in this range right here, I'm not so bearish on it anymore. Okay, so
we had a couple tickers that we missed: KOLD and ERX.
All right, so cold. This is that's not the best looking chart. Give me a second. Let me go over here. So cold is the short nat gas. Let's look at leverage version. Let me get this off real quick so I can see a pure price chart. So the logical so this is you're 3 times short natural gas. So if natural gas is going up in a parabolic move, this is going down. So in theory, yes, this wouldn't be a bad setup right here, because it could just naturally, like a magnet, come all the way back to the 50-day moving average. But we don't know how nat gas is going to run. I mean, it's down 15% today. So if you're trying to play this, you would just have to use some tight stops and hope that you get it right. Because I think right now, playing this where it's at, we could find support in this zone, and then the nat gas could pull back. But the trend is up. Here's how I see it. The trend is up, and you're betting against the trend. So if you do that and you're playing for a mean reversion setup, that's completely fine. But I mean, 10% stop loss, and you need to be out, right? You cannot risk putting, a reasonable position on. And because, I mean, look, one day, if you would have bought at the close on Friday, you'd already be down 15% on that trade. I mean, it's just a very, very volatile. So I might even consider, yes, this is probably a logical and good trade, but I think the risk you have to take is too much. So maybe even consider something that's non-leveraged if you're wanting to short nat gas. But sometimes just betting against the trend, even though the trend looks tired, extended, sometimes it's just, I prefer to bet with it. So ETHE. So Ethereum, yeah, this is looking pretty good right here. This is looking better than Bitcoin because it's above the 50 and above the 200-day moving average. I haven't swing traded any the grayscales in a few months, right? A lot of times, like, I'll just buy and hold some crypto because, I mean, if I swing trade stop losses on the actual crypto and use a stop loss, you're going to get stopped out very, very quickly. You can get stopped out in an hour. That's how quickly they move. But yeah, I mean, this is something interesting. So if I were to draw a downtrend channel and say, hey, this is breaking out, I would say this is very close to breaking out. It's not of this kind of bull flag right here. So you got a bull flag right here, and it's probably breaking out. Now for me, I might let it see if it pulls back and test the trend line a little bit, and then kind of a re-break to get that extra confirmation. But I think this is looking good, a lot better than Bitcoin, and is looking pretty strong. And it's probably likely, even if it does a little zigzagging, it's probably likely to do that. What else we got? ERX. I think that's an energy ETF. Am I correct? Yep. Okay. So this is the 2X daily energy bull leverage ETF. So if you own it, I say keep it. If you don't own it, it looks a little extended right here because look, this was the breakout zone right here, right? You should have bought it as it was crossing 24.25. Now it's 28.40. It's getting pretty steep. And again, it's like when you're looking to buy something, I'm always going to say, okay, how far above support is it? Because it's likely to pull back or retrace at some point in time, even close to support. So I prefer to buy as close to support or the breakout zone as possible because this is like 15, 17% above support. Okay. So if it pulls back and retraces, somewhere under 26, I'd like that better. It's the same as the IEO or the FCG ETFs I was looking at. They look extended right now. So I've been talking about energy for 3 weeks. That's why sometimes when I say, hey, this is looking good, you might want to enter. I did. Those are, you don't want to wait on something. Just swing the bat. We all have winners and losers. You never know which trend is going to be your big one. You never know which stock is going to be your biggest winner of the year. You treat them all the same. So,
okay.
How to handle inverse ETFs. Isn't there something sort of rebalancing with them, like SPXU? Yeah, so that's kind of a complicated answer. Yeah, the short answer is yes, they do weird stuff inside of the ETFs to get that leverage, right? They have to have all kinds of special contracts to get the 2x and the 3x and stuff like that. They are not meant to buy and hold. They are used as short-term trading tools, but I would never buy and hold a 3x for years and years. You can swing trade them where you have some rules, targets, stop losses, but there's probably some really good videos out there on trying to understand the mechanics of what's inside leverage ETFs. They buy a bunch of swaps and derivatives and all kinds of stuff.
We just hit the 30-minute mark. Do we have any other tickers we want to look at real quick? I forget there's a little delay.
Yeah. BTU. K-Dog. Yeah, it's funny because coal is the number one industry right now. I mean, it's so strong. And what's interesting is, and I was actually listening this morning, what's happening with the coal industry is they're shutting down plants. So they're decreasing the supply of coal out there. But the problem is they're not really decreasing the usage of it because we just do not have the clean energy infrastructure to replace it yet. So they're trying to decrease the supply, but they're not decreasing how they use it. So the coal energy, you think it's a dying industry, but it's actually just went on an absolute tear. So with this, let me kind of draw I was looking at a bunch of the coal stocks this week. So this, I might see if it kind of pulls back a little bit. Or like I said, if you want to swing the bat right here, it clearly broke out of this little mini. If you want to swing the bat right here, just use a tight stop, right? Get a 10% stop loss or something like that, which wouldn't really give you a whole lot of room. That's probably like somewhere down here. So it could easily pop and pull back, and you just have to understand that. But yeah, I mean, it's just like I said, you don't know where the money is going to come from. And I am not biased at all. It doesn't have to come from one industry, clean energy, fossil fuels, like, in this to make money here. But yeah, it's a good looking chart. If you're going to chase it, just use a stop loss.
One more. What are your thoughts on SPXU?
So let's look at this. I'm not a fan of inverse ETFs on the market indices. I mean, if I'd say that if you got in right here, great, hold it. But right now, I mean, the market would have to, in my opinion, get slaughtered from here. From this point, after it's already been hit pretty good, for you to make any reasonable money on the short side on going an inverse ETF. And obviously that could happen, but I think the risk reward of entering now is probably not great. So I'd say if you got in here, let the trend run, right? But if you're getting in right here, it's not something I would do. I have found that the more times you try to short, unless you can get it short very close to the top, you're not going to make money most of the time. So you'll have your March 2020 every now and then. Yeah, I mean, if with inverse ETFs or even with leverage ETFs, let's say with leverage ETFs, unless you understand them, don't trade them, right? Unless you're completely just like anything, you have to be comfortable with the risk. Go out there, watch some YouTube videos, try to understand the guts of it, and that way you at least know, because there were a lot of leverage ETFs that were down 90% last March, right? Because the market's down 30, 35, they're 3x. So anyone who bought and hold that thinking they're going to throw their whole retirement in a leverage ETF, who bought and hold that, got wiped out. Anticipate the outlying event because it can happen.
All right. Good stuff. So just to recap, what are we looking at for the week?
So I think right now the uranium ETF seems like it is breaking out. What else did I say? And I'd take a look at the agriculture ETFs. I'd have to go back, Ben. I take a look at the agriculture ETFs. Cocoa is breaking out right here. Maybe it pulls back a little bit. Wheat, coffee. So you have the wheat and the coffee. Yeah, wheat's starting to look a little better this morning. And then you have the coffee. All right, that is kind of break even for the day. So I would look at agriculture. And if you just wanted a conservative play, you could go DBA, which is just invest in a mix of agriculture. You're not going to make a lot of money unless all agriculture's really pop. But if you just wanted a piece and you didn't want to be too aggressive.
Perfect. All right, everybody. Unless you got anything else, Steve, we can wrap it up. I think we got all the tickers. Remember, we've got our credit spread options show on Wednesday, and we will send out a link, but Greg will be doing a live options training webinar on Thursday. Stay tuned for that, or keep an eye out for that. Subscribe to the channel if you haven't already. That's how you can get into the comments. And thank you, Monica. And thanks, everybody, for coming. Steve, you good?
I'm good. Everybody have a great week.
Absolutely. Happy trading, everybody. Thanks.
See ya.